Hey everyone, stick with us versus herd. If it's your first time here, let the content, hit subscribe. If you want to get notifications from when we go live 30 minutes before market close, Monday through Friday. Hit that bell. And if you want to join the UVH fam, our community, links are below in the description to our Discord and our options trading group on Facebook. Both are free to use, free to enjoy, free come to hang out. I know a lot of people have been asking, do we charge? Because a lot of people charge for the Discord. We do not charge for Discord. We do not charge for community building. We're all in this together. So if you're here right now, good morning. Say what's up. Fixing my chair here a little bit. Jeff, Rodney, how we doing? Morning. S&P's up 53. Dow's up 547. NASDAQ up 148. And it looks like we were hitting a high here on the S&P's 3075 area, and we had a pretty abrupt sell-off. We zoom in here. It tanked from 3075 all the way down to 3042, and it's pretty interesting that like a 30-point swing in the S&Ps is the new normal. I mean, here we are. This is the new normal. Carl, Lucas, GB, Kelly, Lion, Trevor, let's get it. Keep an eye out for gold and oil. Yeah, gold is actually down $1.90 right now. Oil is up 74 cents. I currently am rolling into today. Check this out. Zero positions up in here. Zero positions. All right, predictions in the chat. Are we going to have a red day or a green day on the markets? I'm not talking about us personally. Hopefully, we all have green days in our P&Ls. But red day or green day? Call it now. What do you guys think? Microsoft? Man, I think. Let's see here. Microsoft. Yeah, Microsoft's just wild as well. What are we at pre-market? 167. You know, we really need a break. We really need to break the 175 area for it to kind of be bullish. So maybe both. You guys think that we're gonna go from green to red to green? Now that would be wild. Green first half, red second half. But we'll get close to red. Today we'll hold green. Yeah, I mean, yeah, the fact that we're up 500 points on the Dow before the market even opens is telling it's going to be crazy. It's going to be crazy. What would be even crazier if they gapped it up like this and they just maintained and they held it and then they just crushed the crap out of premium. Now that would be, I wouldn't be surprised out of that either. But I say it's pretty much probably. I think it's probably pretty unlikely. Nice hair, only looking short. Yeah, I mean, I've been pretty much trading the short end. What was it? Monday when we had the green day, I was shorting and I lost $160 that day. So it wasn't like the best. It wasn't the best, but I made all that back and then some yesterday. So almost got wrecked on that Fed rate cut though. Kyle, there's a lot of members in our community that have brought it to my attention. So yes. Now going into today's reports real quick. Private payrolls up 183,000. Let's see. Despite the coronavirus scare, private payrolls rose by 183,000. In February, well ahead of Wall Street estimates. Keep in mind, in February, we weren't really worried in the U.S. about the coronavirus because we didn't really have anybody here in the U.S. and nobody died. So just be aware that these reports are going to be a month behind. What's going to be telling is actually March's reports in April. So when March is complete, it's going to be really interesting to see what these numbers are going to be. And you know what are like in April? What were March's manufacturing reports, GDP, payrolls. Like I want to know that. Right now we're still coming off the good. Like these reports are still reflecting that there was no fear in the markets, in the economy. And there really wasn't. In the U.S., we weren't really scared in February. Yes, we had a little bit of volatility and stuff, but we weren't really concerned. But now that it's hit the U.S., and then on top of that, the Fed issues an emergency rate cut, which is alarming. The Fed sees something that we're not seeing, or they're trying to get ahead of what's going to come. So something's going to happen. Something's going to happen. The Fed doesn't do, like I was saying last night on the video, is the Fed doesn't do emergency rate cuts unless there's a big problem. We haven't had an emergency rate cut in over 10 years. So just be aware. The major issue that I see right now with the emergency rate cut is, unlike 2008, we were starting at like 5.25%, 5.5%. Right now, we're at 1%. So we don't have, because they did 3 prior rate cuts, we don't have a lot of ammunition to fight this. I mean, what happens when we go to zero? We go to negative rates. It's not working. Negative rates are not working elsewhere in the world right now. So, but on the other hand, because of that, weekly mortgage refinances spiked 26%. I'll probably be getting another call from my bank asking me if I want to refinance. That drop caused a huge 26% surge in weekly refinance applications compared to 1 week ago. 1 year ago, refinance volume was nearly 224% higher. So it's good news. I mean, good news is that we're dropping rates, but I feel that, the Fed dropping rates when we were at all-time highs, I think they were trying to get ahead of what the economic data was going to be outside of coronavirus. And now that the coronavirus has hit, they are frantic. You know what I mean? They're gonna be nuts. So I don't know. And the thing is, we can't be, I feel like we could be really judgmental of the Fed, we could be real judgmental of the government, but at the end of the day, we're not in their shoes making those decisions. Like, we can say whatever we want because, we're not impacting hundreds of millions of Americans. They are. So when you're in the hot seat, what's the data? What's going through your mind? It's not like an easy job. Sure, all of us could be behind the screen like I am now, or online bashing Powell, bashing Trump, bashing the Fed for cutting rates, blah blah blah. But so everyone's just trying to do their job, whether they're good at it, whether they're bad at it. But so there's some level of respect there. But you need to. It's not an easy job. You know what I mean? Like we can say whatever we want. We can say anything we want about the rate cuts, whether they did it too soon, whether they did it too late. But if you were the one in the hot seat, if I was the one in Powell's shoes, I don't know. I honestly don't know. I mean, it's very stressful, very stressful. I mean, if you're the person that is making decisions if to make or break a recession, I mean, that's a lot of pressure. I mean, he's probably not sleeping. I mean, his quality of life is pretty poor, I would imagine. So, it is what it is. Let's look at. Sorry, guys. I was ranting a little too much. Let me catch up with the chat here. Kyle, do you think TLT can go much higher from here? I mean, I think anything is possible at this point. I mean, we've seen some crazy things. This spiked up to 159 yesterday. I mean, definitely could retouch highs up to 160, I do believe. It's had a run from 135 to 159. Anything is possible right now. Don't write anything off. And I think the major thing is getting too comfortable saying, oh, today's going to be a green day. Today's going to be a red day. This thing can't happen. We are in uncharted territory. Anything can literally happen. We can go down 1,000 points. We can go up 2,000 points. We can go sideways. We can, anything can happen right now. As you can see with the emergency Fed rate cut yesterday, SPY went all the way up from 305 on the 5-minute chart. This is the 5-minute chart. It went all the way up from. Let's go to the 1-minute chart. Let's go to the 1-minute chart yesterday, just to show you how crazy this was. In 1 minute, we went from 306 to 312. So anything can happen. So I just want you guys to step back from being biased and whatever, long, short. Just keep your risk minimal. Have a plan. Have an entry strategy. Have an exit strategy, and stick to the plan. Appreciate it, Kyle. Thank you so much, man. I want to have someone's insight before into the UNH moves. Yeah, I'll look at UNH here. Let me switch back to the 15-minute chart just so it's a little bit easier to read here. S&Ps are moving a little bit sideways right now. UNH, I think there was a couple other tickers here. Rodney INO, I'll look at that. Yeah, the emergency rate cut is strange for sure. Kelly's been scaling into puts with time. Nice. I haven't been trading long term, as you can see. I've been trading very short term. In the bull market, I was trading 10 days, 15 days out, whatever. Now I'm just doing day trading and hanging on because I don't know. We don't know if we're gonna get a bounce back up to all-time highs or if we're gonna rip down. The overnight risk right now is way worse than when we were in the trade war. The trade war was risky. This is way worse because this is globally, and all this news is coming out all the time. Yeah, Nordstrom, we'll take a look at that. Nordstrom got smacked. Okay, UNH, so what are we at right now? 290? Man. Yeah, this could definitely run back up to 300, but I would be cautious up here to 300. So I would like, for me, for instance, I would have, it went from 261 to 290. It's crazy. That's crazy. All we had to do was buy the dip yesterday. All we had to do was buy the dip yesterday. That's nuts. I've never traded United Healthcare. And I've actually never traded any of the healthcare stocks before, but it definitely looks enticing. So I'm going to do some more research on it, and I'm going to probably look at some trades here. I don't like trading just charts for charts. I like to understand the company, and kind of gives me a little bit more edge, UNH has been in my long term for a while. Good company. Yeah, they're beating out Blue Cross. I know that for sure. Blue Cross is getting. Danielle market is doing the most right now. Yeah, let's look at. I want to get back to INO, Rodney INO. Yeah, so this is a penny stock. INO Pharmaceuticals. Man, a lot of liquidity on the options though, so that's nice. A lot of liquidity on the options. So on charts like this, you just have to be cautious. Use proper risk management if you're willing to get into the fray here, because it's just wild. I think the stock market is stressful enough right now. I don't think I wanted to be trading a stock like this. Let's see. Carl, ABBV. All right, there we go. Yeah, so this is gapping up a little bit, a couple bucks as well. ABBV. Let's see, it's at 989. So if we can have like a 92 breach, that would be ideal. 92 breach for the upside. 92 breach, that would be ideal. Yeah, they got a $1.18 dividend. It's nice. Yo, Jason, what's going on? If you're just joining, say what up. Do me a favor, hit the like button. I would appreciate it. Helps me out on this small little channel that we started a couple months ago. It's actually been growing pretty fast. So I definitely appreciate everyone that supports what we do. I enjoy hanging out with all you guys day in, day out. It's definitely a lot of fun for me. You know, Costco. Yeah, so Costco. Let's look at Nordstrom's real quick before we get to Costco. So Nordstrom's, they posted earnings yesterday, and they ripped down from 34 all the way down to 29. It's currently sitting at 30. But they were downtrending. They were actually, Nordstrom's was doing the best out of all of the retailers, and now some of the reports are coming back. It's rough. It's just rough out there for any retailer right now, I think. I think that Nordstrom's will probably last longer than Macy's and obviously JCPenney and Sears. JCPenney and Sears, if there is a recession, JCPenney and Sears are going to be out within 6 months of a recession. If there's a recession, and even before the recession, like a full recession hits, they might even go out of business before a full recession hits. So Macy's would be next, and Nordstrom may hang on. I don't know, but retailers are struggling. In the Chicago area, we have major malls. Like we have Woodfield Mall, which is one of the biggest malls in the country, and even that mall is. There's been a lot of stores that have gone out of business in it, and it has all the anchors. It still has Sears, JCPenney, Macy's. It has all the anchors, but there's a lot of other tiny malls in outside of in different suburbs around here in Chicago that just got stripped. There's nothing in there. Nothing. Zero. So if I'm long-term holding stock into a potential recession, it wouldn't be retail. It would not be retail. Has California upgraded their public trans? I'm not sure. Anyone from California who can speak on that? I'm in the Chicago area, so I cannot speak of that. My fingers are bloody from trying to catch the falling knife. Tobin, don't catch the knife. Just have good risk management. Get in, get out. Get in, get out. We don't know if we're gonna be red one day, green the next. We don't know right now. Anyone that says they know, they're lying. They're lying to you. I hate to say it. A lot of people lie. Kramer was saying he feels more fearful that Powell did a rate cut. Yeah, I think Trevor, I think that it speaks volumes that we did an emergency rate cut so soon. Things haven't even hit that bad yet. Things are bad, but not that bad, especially in the U.S. But if things get real bad, we're gonna need some of that. But I'm not gonna speak on that because I've already ranted. I've already ranted on the Fed and Powell. So, Daniel, morning. How was your work this morning? Bail on GILD. GILD. GILD is holding it. It had a nice ramp at close yesterday. For me, based on the weekly, if I'm looking at the weekly, if I was holding a position here, I would hold it. If you made it through the fire, dipping down to 66 and back up to 75, I would take my chances and see if we could retouch 80 on the weekly chart. That's what I would do for myself. I'm not trading GILD. I'm not trading any of the pharmaceuticals. But if I was, and I was looking at the weekly chart alone, and I made it through the fire at 66, I would right now, it's teetering. It's going to make a decision here. It's going to be below 75 or above 75. So the question is, which way is it going to be? Colin, what am I trading right now? So Colin, I've been playing right now. My portfolio, as you can see, I got nothing in my portfolio. I went over earlier. I closed all my trades out yesterday. So right now, I did want to talk about this. We'll talk about Costco in just 1 second. I did want to speak on what I'm trading and why I'm trading it. Right now, I'm trading S&P futures /ES. I'm trading SPY, and I'm trading possibly Apple. And the reason why I'm only sticking to those right now is because the markets are not as liquid as they used to be. As you guys can tell, even in SPY, there's the bid and the ask. sometimes goes beyond 10 cents, 20 cents, especially when volatility is high. So be very careful trading low volume options. You potentially may not be able to get out of those trades. Even on the S&P, I was having trouble getting filled on some spreads, and that is not normal. So you need to be careful right now when trading options. Stick to the most liquid options, because you could potentially be in a position you can't get out of a trade due to liquidity. And market makers are all a mess. As you can see, if there's a bid ask greater than 10 cents on the SPY, things are not normal. Things are not normal right now. So you need to be very careful. So I did want to say that on the stream today, because I feel like some people are getting themselves, we can't trade like we're used to trading in the bull market when we were just going up every day, and we can take some risk on some lower volume options. But right now, when the stocks are going up and down and sideways and everywhere in between, we need to stick to the highest volume options, and that's why I'm pretty much just trading liquid options on futures. I'll trade gold / GC. You can trade. You can make money. I mean, Apple was fine, but even on Apple, the bid and the ask exceeded $1 at one point. Yesterday. Let me just show you Apple. I was trading out. What was my put yesterday on Apple? Yesterday I had the 300 put. So on Apple, I was trading this, made a couple hundred. But let me just show you this for a second. So this is Apple, one of the most liquid options chains in the world right now. So this went down. I want to go to. Actually, I want to do the 5-minute chart. This will show you here. When it dropped here from, this looks a little bit better. When it dropped from $10 down to $3, you had some real issues getting in and out of a trade at a decent price. And even I was trading yesterday. What was I trading? SPY. I had the 306 put on SPY too. Let me pull that up. Now this one's even more scary. 306 put on SPY, and I had it for, it's going to actually be today's expiration now. But I was trading this, and this is SPY. Man, Thinkorswim. Anyone notice Thinkorswim has been like kind of slow? I have a super fast internet connection. It's been lagging. Now, this went from $4 down to a penny in seconds. So if you think you're going to get a good fill, and this is on SPY, traded tens of thousands of contracts on this strike per day. You need to be careful. So that's why I'm really sticking to liquid options. Even on SPY, you can get screwed. So if you can get screwed on SPY in Apple contracts, I honestly don't want to take a risk with my money trading things that are less liquid right now. And I think most traders would agree with you on that. With me on that. Yeah, Trevor, I actually, Trading in the Zone by Mark Douglas, I actually have on Audible. It's great for the car. If you guys are interested in more psychology, I think that, let's look at Costco real quick before I talk about that. So Costco earnings. So Costco has earnings after close on Thursday. Costco's up a little bit, up $5 pre-market. It's running. Now, the one thing that I will say is I would want to be very careful with Costco, because the earnings are going to reflect the previous quarter. It's not going to reflect sales since the coronavirus has been going. It's not going to impact sales. The report's not going to have the numbers in there for them being empty on toilet paper and Lysol. Okay, so just be mindful that this is last quarter's numbers that they're reporting. Now they're they're obviously going to issue a guidance. So I don't know what is going to be in that guidance. So you just have to be mindful that this report is last quarter, not the current quarter, this current situation that we are in. So Costco, I mean, I am bullish Costco, but I am concerned from last quarter, all the retailers slashing their numbers. So we'll see what happens. I'll probably sit out on Costco, and Costco is one of those stocks that doesn't have the most liquid options, anyways. This is not bad. But if you're looking at the 312.5 call, I mean, that's 70 cents wide there, 40 cents wide bid ask. 63-cent wide bid ask. So it's you want to be careful when trading something like this. It's not something that you'd want to day trade. But future guidance could be different. Yeah, they could miss earnings, and then they could future guidance for 2020. They could say, hey, we're going to smash earnings. One thing that I would be concerned about with Costco though is their suppliers and manufacturers not being able to supply their needs. That would be troublesome. Now, if manufacturing is down, suppliers are down, people aren't showing up to work, you want to be mindful that Costco only makes money if their stocks or if their shelves are stocked. If their shelves are stocked, they make money. If there's nothing there, no one's going to go there and they can't make money. So just be mindful that we may have a supply disruption. If this thing gets really bad, we may have disruption in the supply chain where Walmart and Costco and Target are not going to be able to get consumer goods. So that is, I see a potential issue there. So right now I say Costco for earnings is very high risk. And if you're looking for a premium crush, it's going to be difficult to get premium crush right now. So I haven't been really trading earnings because there really has not been a premium crush because we have such volatility that you're not going to get the risk to reward that you want. Supply issues could be the issue with earnings. So just be mindful. Right now we're in the beginning stages, but as people loading up and people trying to meet, suppliers trying to meet the new demand, and if they can't meet that, or if production's being shut down, in certain places, if things get real bad, like now there's a coronavirus case in Seattle, in Amazon. An Amazon employee tested positive in Seattle for coronavirus, not at the headquarters, but one of their campuses surrounding it. I mean, we don't know. We don't know, right? It's too early to tell right now. So like I say, if you don't know about a trade and you're not confident in it, don't just be like, oh, I guess I'll just throw this trade on here and hope for the best. No, you're going to lose. Like, I've done that. We've all done that. We're like, oh, I'm not sure, but let me just try it anyways. No, don't do it. Don't do it. Now is not the time to test strategies. Now is not the time to take a guess. Right now, trade high probability setups that you can win. You don't want to just go all willy-nilly and be like, oh, I just think that I'll just throw this trade on and maybe it'll work, maybe it won't. Now is not the time because you're going to make money or go to zero instantly in this market. I mean, there's like you saw on that SPY put. I was able to get out for 50% loss, but I could have went in seconds. I could have went from, that option. Let me show you. This option here is serious. I paid $417 for this. I sold it for $220. I saw it go to max loss and back up to $200 in a blink of an eye, so I sold. So I got my $200 back. So in a blink of an eye, your option contract can go from 100% down to zero in a blink of an eye. So you just want to be very mindful and use proper risk management. And that's why I'm also only trading like one ticker at a time. I only have 1 or 2 tickers on at a time, because when something like this happens, like it goes from 400 down to a penny, and if you have 10 positions on, you're going to have a hard time getting out and adjusting. It's going to create a lot of work for you. And if you, let's say you had 10 bearish positions on, 8 bearish positions on, and the market ripped up on that Fed news yesterday and didn't come back, your account's blown up instantly. So sorry, I'm a little fired up today. I'm a little fired up today, but I just see so many traders, doing market just opened up, making trades that they can't cover in the event of a catastrophe. Let's see what's going on. Let's see what's going on right now. Yeah, right now is not the time to get crazy. Use self-control. I agree with you, Colin. Self-control is going to make or break your portfolio right now. So right now, we're moving up. SPY's at 305, almost 306. S&Ps are at 3060. Dow's up 631. NASDAQ up 173. So it's going to be pretty interesting. Let's see what Apple's doing. Apple's moving back up to 300 area. Anyone else's TOS freeze? I mean, mine hasn't frozen, but I mean, I have a pretty powerful computer. One thing that I will say is that it does load the charts a little bit slower than it used to. So yeah, let's make some money. Most traders are too anxious. So you guys definitely be safe. You know, if you haven't joined our Discord, come hang out in our Discord. We're in there pretty much all day, just talking about the market, getting some ideas, bouncing ideas off of each other. So if you haven't yet, the link is below in the description. As always, stay safe, stay green. It's us versus herd.